So especially because time is of the essence, etc., etc. So this is our second community call. Welcome everyone. If it's your first time joining us, thank you, and we appreciate it. We're really keen on having a very active and engaged community. So the agenda for our second call is an update on phase 2, which started Sunday. Then we'll head over to a development update from Paul, and we'll finish off with a questions and answers session. We're going to aim to do this all in 30 minutes this evening. So one, for your benefit, and also so we don't, especially me, I don't ramble on for an hour or so. But it's looking good. I guess we're at 11 participants so far. That seems pretty good.
Another couple dropping in. I think maybe it's worth giving the background, maybe starting into phase 2 all about, and then go into phase 2 changes.
Precisely.
Start
yes.
now.
Yeah. Okay, so I'll start with a quick phase 2 update, which is we all start essentially this flow protocol started with this whole fair and democratic launch in phase 1 with whitelisted addresses and limits per pool to enable very fair and wide distribution to those who are active and engaged community members in the DeFi ecosystem.
Да.
You all right over there?
Слушам тук един community call.
Yes, thank you very much. Don't worry, it happens to everyone. Anyways, where was I? So, and we had a whole governance vote on the pools. Then we wanted to include in phase 2, which was going to occur after phase 1, which lasted 6 weeks. And those pools were chosen via our new fork of Snapshot Labs called Scattershot, which allows people to vote with their bank in a proportional manner. I think a fine creation, not to sound too full of myself, but there you go. Scattershot is lit. We appreciate the love. And 5 additional pools were chosen by the community. Phase 2 started on Sunday, and now we're into the 3rd, 4th day of phase 2. A community member raised concerns, and in fact, actually, many members of the community raised concerns regarding the state of phase 2 in terms of the distribution and how is it really in line with what the aims were of the protocol, given the occurrences that were happening. Either way, we thought it was a reasonable concern, and the evidence presented was, I think, very good. And so we took up this community forum proposal and put it forward for a governance vote, which is actually underway now, and it closes tomorrow evening at 6 p.m. And this vote will be essentially deciding whether we end phase 2 at the end of this week and start something called phase 3, which will last for 6 weeks and distribute the previously allocated rewards to the last week of phase 2, so 10,500 bank, to this phase 3. But the special thing about phase 3 is not only will it last only 6 weeks, but it will also only contain the bank ETH SLP pool. And so far that vote's going on, and I mean, it's, you can never trust the polls, but people have been voting with their bank in accordance, and it's there's a strong sentiment for the shortening of phase 2 and the addition of phase 3. So
building on that, I just wanted to say that we were obviously very keen on sticking to our guns. We don't want it to be like a fickle, we promise one thing, we move on to another. But I think it's also important that we did all this stuff to engage community members and to make sure we had people who were voters and who were democratically inclined. So I think it's also very positive that we had this kind of spin on it and going like, okay, let's let's take a restock. The community member wants this. Let's see if we can relaunch it and get this stuff going, which I'm quite proud of, really, because I think it's a positive thing to be willing to change based on well-reasoned arguments, which I think is the important thing. So that's kind of phase 2 as a whole. I think it's kind of, the TVL is is really cool to have, but it's very much a it was very much an indicator for us. It's not something which we gain a lot of value out of because we don't utilize that TVL in a very dramatic way. It was always designed as phase 2 to be a distribution point and a way for a bit of price discovery. So it's why the questions about APY and things like that really don't matter to us, because in our eyes, one bank is one bank, and at the moment, one bank is worth how much it is once the protocol is fully released. Like, there is the speculation at the moment is a speculation that we are, think is interesting, but ultimately will come down to the valuability of the float protocol itself, which we are, obviously on board with and very confident on. But that's our sort of prerogative to be so as the people who make it. So that's kind of the background for phase 2/phase 3. I think that's probably all we're going to say on that per se, and then we'll move on to sort of development updates, UI UX, light paper. As always with these community calls, feel free to ping questions and everything else, and we'll answer them as and when we spot them. So development update, we're basically fiddling around waiting for the final freeze where nothing else can be changed. Literally today, I was looking at the Uniswap v2 libraries, the bits that are open source, and they've got like this gas efficient safe math, which I'm going to integrate into the protocol because it's always nice to get some cost savings there. Linked to that is the sort of new target price calculator, which we call the sort of monetary policy from a contract perspective. So that's going to be deciding what the target price actually become. A little bit more background on that, because we had a question about that earlier in the Discord. I don't think Ringo got around to answering it, but essentially the target price is adjusted based upon the difference between the market price and the target price at the auction. So when we're in expansion, say, it would say, okay, the difference between the target and market price is 10%. It will then square root that, because we want to make sure this changes a rapid increase to start with and then diminishes off as times go on. And then it will say, how long do we want to return to this target price if the market price stays the same and the basket price is solid? What that basically means is, if the market price was at $2 and the target price was at $1, then it will go, how long should it take in blocks, because it's blockchain and we can't use time. Time is not a trustworthy thing, in order to return to that peg. And it will start at being 2,000, 2 million, and then it will go all the way down to 2,000. And that kind of adjustment will basically decide whether it's 2 million or 2,000 is based on how different the market price is from the target price. It's all documented in the light paper, which is the next sort of big update. I'm desperate to get that released out, because I think it answers a lot of the questions. But we want to make sure it's done right. We don't want to skip the necessary work to do so. So linking on to that, I've seen a question from Callum there about the launch plan. Launch plan is as soon as possible, as soon as the audit is complete. Because once we have this code freeze, it all gets handed over to the auditors and the reviewers, and any sort of suggestions they get back, we're going to have to sort of consider those and see whether those are things which we think need changing, or if they are things which are interesting but not something where, so say like a stylistic concern, or if there's a documentation point that we should have made clearer, which is also stuff included in audits like that. And then we'll update those stuff as necessary. If it's a bigger thing, then it might take a little bit longer, which is why it's tricky to pin us down to a hard date, because we don't want to say, oh, we will release it in 4 weeks, and then the audit takes 5 weeks, but we decide to release it anyway just because. And that's exactly what we don't want. We want to make sure the time where we spend is time spent correctly. So linked onto that, the UI UX design for the auctions, those are progressing nicely. We've got the sort of design sketched out for how we want those to look, how people are going to participate. Obviously, to an element of that is going to be become very sort of behind the scenes. So we expect that there's to be a lot of arbitragation bots or things which don't use our user interface to be participating in these auctions. That's to be expected, and I think that's actually good. We just want to make sure the auction also displays that clearly, as well as also allowing people who are at the human rate to participate, especially early on, where those bots won't be as active. So I think that's the rough summary for the development. I'm sure there'll be tons of stuff I've forgotten, and there's always stuff to do. Just clarifying, because one of the members have just pinged me about it, is that there's 200,000 blocks is the minimum and 2 million is the maximum. Just to clarify that time change, again, it's all written down. I was talking off my head, which is clearly is not faultless. But that being said, I think that's the primary summaries for the community call at the moment. If anyone's got any questions, feel free. Otherwise, I suspect John might have some things I've forgotten about to mention. Just have a chat for a bit if people are interested. John, you got anything at the moment which I forgot?
I think you've actually covered most things. Or I mean, maybe you want to mention in terms of timeline for the audits and things like that. But I think
Sure. Yeah, so code freeze, the plan when no one can touch the code anymore, is going to be in a week. So that's the point where I'm determined to say no more code touches it unless this is a documentation thing, and then it's handed off for everyone to look at and for review. In terms of Terravellis has asked a day in the life of the Abbey Road hacker. The relevance to that is basically I tend to work late is my sort of work pattern. So as John likes working early, so it tends to be a sort of handoff where I will sort of go to sleep and John will start working, and that's kind of how we manage to always be the community presence there. I normally sort of start off work by seeing if there's anything relevant from the channels, then move on to. At the moment, I've been very smart contract focused, did a bit of scattershot updating for the strategies yesterday night, faffing around with those, making sure the LPers could vote, trying to optimize the earned calculations, because in general, it gets very expensive to compute for the 2,500 voters we were having before. So we needed to do a bit of optimization there to get it into the running stage. Linked to the reviewing the audit stuff, it's worth mentioning that we're doing a split between peer reviews and official audits. The reason we do that is because we find that sometimes peer reviews or reviews which are less formal actually bring up more stuff than the official audits do. We run a lot of, I mean, you'll notice if you look at the GitHub contracts in depth, that we already run a lot of like automated tools to test the security of the contracts. And often that can pick up a lot of stuff by default, but some of the more sort of logic style bugs or the logic sort of flaws tend to be picked up by someone who can spend a fair amount of time and really knows their stuff inside out. We're aiming for 2 professional audits alongside those. We will see, we're in chats with people about that already as to who those people will be, but we want to, I'll give some flexibility for that before confirming. In terms of adding people to the team, yeah, I'm kind of on board for it. The team, I think, is ready to sort of move faster and expand if necessary. I think the plan is, as this kind of group is, you get a pseudonym. Everyone will be someone who will come into the team under that, and that will be your representation to the float community. I think that's the intro we want, and maybe these kind of roles will sort of swap out as and when. So if someone else becomes sort of head dev, which is kind of the role I've been taking over, then maybe there'll be a new pool and I'll move off to a different character. I'm not planning that anytime soon, but I think that's kind of the way we imagine the team structure kind of flowing.
And there was always a fifth beetle, right? You know, there's always this fifth.
I got a couple
and I think
I got a couple of questions for you guys, if I may. So the first question, I'm primarily curious around the differences between the reserve protocol and how it functions with the RSR, RSV tokens, and how that compares to the bank and float pair. And then I can come back to the second question.
If you don't mind, could you pass me the second question as well? Just because I don't have that much background on the reserve protocol, and then I can.
Yeah, not at all. And so I guess my second question is much more so around adoption and utilization of the float token. So I'm curious if there are any sort of product-driven initiatives around getting certain types of organizations to accept float as payment, or using float for broader purposes than just carrying value, like let's say like a DAI token.
Cool. Yeah. So the second question is easier to answer because we've discussed that more. So there are two main avenues for approach here. We see avenue one is collateral and becoming the new form of collateral for various protocols. And the reason that's useful is because of the dampening low volatility effects. The second avenue is becoming the unit of currency for certain applications on chain, specifically related to crypto applications. The reason we expect that is because it's more natural to price things in float than it would be to price things in dollars, because the price of ETH, say, increases so dramatically that becomes very volatile and hard to price things in, but the price of float will increase enough so your purchasing power within the crypto sort of purchasing world is protected. But the dollar value is more. So you get these kind of digital goods are more easily priced in float than they would be in any other system. So that's the sort of second avenue for adoption.
Yeah. Paul, I think that answers my question, because the RSV stable coin is actually pegged at $1. It's meant to be sort of 1.0. So that would be the primary difference there. Thank you.
Perfect. No worries. I'm glad that answered that. In terms of another question that's been dropped in the chat is how much do we expect float to change in price? This is generally something we've covered in the monetary policy, and we're modeling the target price changes to it. What that means is we want this to be have a target price change that's in line with how the crypto market moves. We don't want it to be a completely static, stays as 1.618. The reason we think this is important is because real currencies, like the dollar as the classical example, do inflate in the amount of like the goods you can buy with them. So if you get paid $10 10 years ago, you're going to be quite upset if you got paid $10 today. And it's that kind of inflationary model for how much you can buy with stuff we think is quite important. So we have our first assumption of how much that target price will move. Our very first one had a much more dramatic move than we think we are going for now. So we're aiming for about 30% for the 2020 as opposed to 50, which was like our complete original one. But it's generally hard to say what will happen because we want to make sure that those policies are sort of malleable enough that we can adapt those. And it's a bit like something the governance will adjust as the protocol comes live, depending on what the desire and the tolerance for float adjustment is. So we've got our defaults that we think are about right, but ultimately it varies. Oh, and yeah, the formula for target price, essentially, I'm going to quickly summarize that again. I did cover it, is the difference between market and target gives how long the price is going to take to adjust. So if there's a big difference, i.e. the market is twice or 4 times the amount, then it would take a much shorter time to adjust back to that price, or it will adjust more dramatically than if the market price is, say, only a little bit. And the way we do that adjustment is we say that at the maximum time frame that can be is 2 million blocks, and the minimum time frame that can be is 200,000 blocks. So that's kind of the range of time taken to adjust the target price. And that gives us our cap on how much our price can be adjusted each time.
Yeah.
So yeah, and so each auction then just adjusts the price by that amount. And that's sort of because of that cap, that makes it that kind of smooth profile we want, and also restrains how big the price moves can be corresponding to our price movements for the underlying collateral, or the underlying basket is what I should say.
Yeah, and to follow up, just to give context to those numbers, is you're looking at a year to a month kind of time scale.
Yeah, which brings me on something I wanted to bring up is the sort of, I think the death spiral kind of discussion is quite interesting, because I like to think of it for float as more of like a twirl. And that's because it's a floating currency, it means that the target price can renormalize. So we never have a complete collapse of the protocol caused by these kind of classical scenarios of people trying to sell off like float and bank too quickly. So there's like a death spiral without any death is kind of more of a twirl in my eyes, but it's interesting because the absolute worst case is a 30-day decrease in price based upon what I was talking about that target price stuff early. And it's likely to be much less than that in order to find that new normal or that new price. And the link to that is because there's never a price collapse, it means you get that confidence that the protocol will come back and that bank will start making a profit. And if there's a panic selling, i.e. there's sales without, while we still have the collateral to support the float price, which is code for if the basket factor is above 1, then bank holders actually make a profit on that panic selling, which is why I think it's quite an interesting concept that with this kind of floating currency that you can do is you can game that the sort of death spiral to make a more profit-based scenario for people who stick with the protocol. And because they gain if they stick with the protocol, it kind of curtails that sort of game theory effect, which causes this spiral to get really bad. So there's kind of two aspects there. One, it won't ever mean the protocol collapses completely. And two, there's this game theory sort of positive side for sticking with as the price gets reduction, because any panic selling turns into profit. Cool. Got a couple more questions. Can you talk about why you think it will be more popular as a choice than Reflexer in the short term? So Reflexer is a really cool model. Like, I think the PID model is really interesting. It's not the model that I think is the most effective at capturing this idea of purchasing power, because it can be very tightly constrained to a very narrow band, but that narrow band also harms it, because it means if ETH does a 20, 30x, or more likely a 5x, as this has done in the last year, if you hold just RAI, it becomes a very similar scenario to holding just DAI, for instance. It becomes this kind of, you've missed out a lot on that opportunity. Whereas if you hold float, you will still be able to buy the same amount of goods with that. Whereas if you hold RAI, then the crypto price moves up, or the crypto sort of, think about gas prices as a great example of how, like, gas prices now compared to what they were 2 years ago, if you were trying to do this all in dollar terms, you would never be able to afford the same operations. Whereas if you were holding that money in float instead, because the purchasing price or the target price will adjust up in correspondence, it's just a dampened version of that. It means that you still gain some value. Linked to that is that RAI has a quite interesting property of the redemption price moving down if there is more demand for RAI.
Yeah.
So if people really like RAI for whatever reason, then it actually means the price moves down in a sort of opposite way to the way you'd expect. Whereas in float, if there's more demand, then the price moves up or gets adjusted back to what you'd expect, depending on whether ETH is stable. That to note, that redemption price is only if ETH is stable. So that's the important thing. Cool. So that's the relevance for Reflexer. Do you want to take the incentives for bank holders in the long run? I feel like I've been chatting for a while.
Sure. So I guess the incentives for bank holders in the long run, first of all, if people aren't aware, is the bank token serves three purposes in the protocol. And one is it takes profit in times of excess demand for float, which you could argue actually is one incentive right there. And two, it sometimes supports the price of float in times of low demand, especially if the basket is not well supported. And three, it governs the float protocol. And I think, one is an obvious incentive, but three, I think governance has proven itself to be very key, even in the short term. So far, bank holders have been able to literally decide which pools they want to see in phase two. And furthermore, they're currently deciding whether we're even going to continue with phase two in the long run or in the short run. So there's that. And furthermore, this element of governance is so important for a protocol which has, been raised by the community and is, has this democratic launch aspect to it. It's something that you really, as a bank holder, you kind of really, I mean, I don't like the word, but you buy into this in a sense. The way the auctions are designed, to go back to point one, is that bank holders actually benefit in many cases, and that's in this expansionary case, it's an up expansion case where there's high demand for float and the basket is well supported. In the other case where there still is high demand for float, but the basket isn't well supported, and even in the case where the basket is very well supported, but the demand for float is low, so we need to contract the supply, is that because the basket is so well supported, we're looking at essentially situations where we're willing to actually buy that bank off the market and actually capture the excess basket factor and pass it over to bank holders as well, because this excess basket factor isn't necessary for the protocol. We're here to build a capital efficient system.
Mm-hmm. Yeah. There's been another question in the chat about what degree of technical competency will auction participation require? It's a good question. And I think it's going to become progressively more difficult to make money on these auctions as time goes on, because the efficiency will increase, and hence the opportunities for making a huge amount of float or bank is going to be trickier. That being said, so there will be an element of buyer beware when the auctions come in, because you can make trades that are very unprofitable. That's kind of the point of having these Dutch auctions, where you descend from a price that isn't great to a price that is great from the perspective of a person buying from the auction or selling to the auction. So if you jump in too early, there is a chance that you are gifting the protocol money, in the sense you are giving it more than you will get back. So that's something which you should be aware of going in, and we'll make that very clear. It is also true, though, that we will do our best to make it clear in the UI when we think you will make money. So we have to do this kind of modeling when we're doing the simulations, is when arbitrageurs will take a certain offer. So that is based on what the market price is at the moment, what the target price is, and kind of working, given the amount of float we're going to get out, or given the amount of bank and ETH we have to put in, you can work out what that profit ratio is. Most likely, because we've already implemented that code, we will probably just drop that into the auction as well, and it will tell you what the likely profit opportunity is. If someone is really on it, then they will beat you to the punch, in the sense they will take a smaller, more narrow profit opportunity, because we'll likely give some tolerance ranges, and hence will be able to gain profit from the auction before you can. The auctions are kind of at the beginning, early on, more of a interesting fun mechanic, because we expect the kind of UI side to disappear slowly over time, and it become more of a monitoring system. And like, you can see what happened in the auctions, you can see how the target price adjusts and the market price adjusts. So we'll the answer is we'll try and make it very easy to participate without the technical competency. Whether you will make money using that logic, I won't be able to say. It ultimately comes down to how quickly everyone reacts and how quickly people who are willing to take more risk than the UI will present to you comes into it.
Yeah, it's this amazing thing about Dutch auctions, which is why we're kind of using them. They really allow this capital efficient system for us to move for us to try and move this market price to target price in the simplest way as possible.
Yeah, and also have that reliance on not having completely up-to-date prices. Because we use an average price for the past sort of period, we can actually get away with that because these Dutch auctions start with a sort of bad trade from the perspective of someone coming in, but a good trade for the protocol. Which means that if the prices turn out to be stale, all it means is that the clearing price or the price where we think profitability will occur actually just shifts earlier in the auction. And if we're wrong in the other way, it just shifts later in the auction. Which means you just have this dynamic sort of shifting about when this sort of profit point occurs, depends on how accurate those the TWAP is, or the time-weighted average, in case I didn't explain that, for that past period. Cool. I think that has covered all the things we want to. Yeah, we said we were going to try and keep it to half an hour, and it's 3 minutes past half an hour, so we have not quite succeeded there, but I think lots of good questions from everyone. And hopefully that update was useful for you. As always, join on Discord to have a chat with us whenever, and we'll answer as soon as we can. I hope you feel that we've been quite active about that, and in the Telegram community. We do try our best to make sure.
I love talking to you guys.
So yeah, that's the plan. Thanks very much, guys. Cool. I will see you on those channels.
See you around.
Thanks, guys.
Thank you.